The first commodity we are going to be looking at this morning is, of course, the US oil spot. And on the US oil spot, we have been quite profitable this week on the US oil spot. And if you had been with us since Monday on this commodity, you will see that we have been selling the US oil spots after price action broke down the $73 area. And since then, price action has moved a whooping over 600 pips in our favor. And don't forget that we had multiple entries captured on this one as we continue to add more positions at the breakdown of key structures in this market. As you can see here, we had structures like the $72.30 level. We have the $71.80 area. We also had the $71 level here. We also had another one here yesterday when we analyzed this market after identifying a flat channel between the $69.80 level and the $69 area, giving us a flat channel to work with. And we also took advantage of that opportunity there as well, which also gave us about roughly 200 pips on the first position. And if you had missed out on that one, the market presented another chance again, though that move didn't last long like the previous one we saw here. How price action moved about 140 pips before this old choppy situation we are witnessing in this market is happening right now. So congrats to everyone who has been part of this profitable journey. Well done to you guys for being on standby to catch these opportunities we had this week. So right now we are going into the New York session today. What is going to be our plans? How do we intend to position ourselves ahead of the New York session today? Well, I was able to identify a simple setup on this chart this morning after monitoring how price action has been playing out in the last 24 hours, I think. And one of the key factors that we are going to be using today is this bearish trend line that you can see on your screen right now. So for the sake of clarity, let me highlight it out. So after connecting the series of lower highs in this market, you will see that we have a bearish trend line figured out. And since Tuesday's trading session, New York session on Tuesday, we have seen how this trend line had continued to reject every bullish attempt in this market, hereby giving us a sign that sellers are still strong at this juncture in the market. However, something interesting happened here during the first couple of hours in the New York session yesterday when we saw price action drop into the $67.50 area. We saw the first touch of this level here, and then we saw the second touch during the early hours of today around this area. But one thing we can take out of this is that the inability of price action to break below the previous low is a sign that buyers are gradually gaining momentum. Well, despite these lower highs we saw here, you will see that we are yet to find a lower low to emphasize or give a statement that bearish momentum is still very possible from this current structure. So I'm of the opinion that we might likely be seeing a reversal pattern from this area, but mind you, we are not ignoring the potentials that sellers could still take over this market. So we are going to be weighing both options to see how to position ourselves ahead of the New York session today. So we are going to first of all talk about the potentials that the buyers have from this current structure. So now when we look at things from an holistic point of view and considering the impulsive move, bearish move that brought us to this point in the market, you will see our price dropped into the $67.50 area. We saw price come back into the $69 area. Then we saw how price was unable to break the previous low, hereby giving us a situation where there is a chance that price action could transition into a reversal pattern, in the form of a double bottom structure. And you know how we do it. Whenever we start spotting the potential that price action could transition into a reversal pattern, the next thing we want to do is to project a neckline for this reversal pattern, which definitely is going to be a platform that will guide us to validate the potency of this structure. So what we did here, you can see we had a neckline which coincidentally shares a confluence with that support line of the flat channel we identified during our live session yesterday, which falls at the $69 level. And with the neckline around the $69 area, we are going to wait for price action to break out, retest the structure to confirm that we have a reversal pattern on our books. So this is what we are going to be looking out for to buy the US oil spot for today. So we want to see price action break out to the $69 level. And if you look closely at this level, you will see how it shares a confluence with that bearish trend line we identified earlier. So if we have price action breakout of this bearish trend line, then this will be a sign that the trend line may no longer have the capacity to negate the bullish momentum anymore, hereby negating it and confirming that we have a counter trend opportunity on our books. So with this situation here, we are going to be looking forward to a breakout retest of structure. And if you are a conscious trader, you might want to wait for a retest to confirm the validity of the buyers around this area before joining that move to the upside. And we also have another structure at the $69.80 level, which happens to be the resistant line of the flat channel we identified during our live session yesterday. And if a breakout retest of that level also happens, it will be welcoming more opportunities to add more position to our existing trade. And we still have structures like the $71 area here, which was a significant demand zone in the past, as you can see. And if price breaks above that area as well, we want to be looking out for more opportunities to add more position to our existing trade. But there is a caveat to this whole setup that we are talking about here. That is, if price action ever breaks out of the $69 area and we start seeing buy opportunity, one thing for sure here is that we must acknowledge that this is a counter trend opportunity. And you know how we do it. Whenever we have counter trend opportunities, we want to ensure that we are always around to monitor price action. As price action moves significantly in our favor, we move our stop loss accordingly to secure and rather position all the way up, because anything could still happen here. This is a very strong bearish momentum, and even if we join the bullish buyers here at the breakout of the 69, we want to ensure that we move our stop losses accordingly, as these levels I made mention earlier could still serve as a strong selling niche in this market. So whatever happens around that area is going to be determining if we are going to be adding more buy position or getting ready to sell. So that is what we are going to be looking at on this chart to look out for buying opportunity on the USO spot. So we are looking for anything above the $69 area. Now, in as much as we're looking out for buying opportunity here, we cannot ignore the potentials of the sellers at this particular point in time. And considering the fact that price action has been bearish since the beginning of the week, let's look at what to look out for here that will give us an insight into a trend continuation to the downside. Well, one of the structures I was able to identify here is this trend line. After connecting the series of higher lows, of course, price action has been finding higher lows since the New York session yesterday. We have the first one here, we have the second one here, and currently price action is oscillating around this area in the last couple of hours. And in fact, the last hour candle here closed in the form of a hammer candle, which from a technical standpoint is a strong signal that buyers are still present around this area. So we need to be very, very careful here, as we are at a critical point in the market where anything could actually happen. So for us to sell the US oil spot today, we want to see a breach of this bullish trend line. That is, price action breaks down the trend line to the downside, giving us a bearish signal. And if we do have a breakdown of the structure, remember, we are not getting too excited at this point. We are neither having a sell stop order yet, because we want to see a significant confirmation that will help us to validate that selling pressure is gradually gaining momentum. So we want to scale down into our lower time frame, like the 10, 5 or 15 minutes time frame, to look out for retest of structure. It could be the retest of the bullish trend line, or in fact the retest of this bearish trend line we identified earlier. You will see what a confluence we have there, and that area is going to be a major determinant of price action if it does comes back to retest that level. So we want to see price action retest it, and continued selling pressure around that area will further confirm that sellers are still strong in the market. Then we could join the bearish momentum to the downside. So this is how we are going to be selling the US oil spot today. And one thing we also want to take note of here is this demand zone at the $67.50 area. Let me show you quickly here. So we have the $67.50 area. We want to take note of that demand zone while we are selling. So whenever price action gets into that zone, we want to move all our stop losses to secure the current sell position and wait out to see how price action reacts to the zone to determine if we are going to be adding more sell position or getting ready to buy the US oil spot again. So if we start seeing buy pressure around the $67.50 zone, we look out for opportunities to buy, and if we see a breakdown of the $67.50 level, we then look out for opportunities to sell. So this is basically what we are going to be doing on the US oil spot today. So we have a simple setup here where the $69 area serving as a neckline of this potential reversal pattern will be welcoming buy opportunity if it so happens that price action breaks out of that level. But if it happens that we have a breach of this trend line here, then I've told you that we want to scale down into our lower time frame to look out for confirmation that will support a trend continuation to the downside. So please, let's take note of this. Mark this out on your chart, and if possible, you might want to screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. So if you have any questions regarding what I just explained so far, or you need me to shed more light in an aspect or a particular structure here, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard.